Please don't be fooled by the popular narrative. The narrative that Bitcoin outperforms everything else in crypto always, because that's what this chart implies as well. This shows the Bitcoin dominance, how much of all of crypto is in BTC. And this chart suggests that Bitcoin should, at least in relative terms, do better than the rest of crypto in the near future. The picture becomes even more compelling when we adjust this chart by excluding the stablecoins. Now the bottoms align even better than on the pure dominance chart. The problem is that the outperformance of Bitcoin versus the rest of the market was mainly driven by treasury companies. Companies such as Michael Saylor's strategy, formerly known as MicroStrategy, purchased Bitcoin aggressively. But it's questionable whether or not those purchases will continue at the same rate. For example, the preferred stock called STRC has decoupled from its target price of $100. And so when one of the main purchasers of Bitcoin suddenly stops buying and the popular narrative breaks, is there potentially an opportunity here? Hi, my name is Gerhard. I've been in the crypto space for the last 8 years and had my first million 3 years ago. My track record is on the website down below. There are also automated copy trading pools. So in case you want to trade exactly like I do on autopilot, that's all described on the website as well. Over the last 5 years, I outperformed buying and holding Bitcoin by on average 2.3% per month. So what we see here in this chart, that's my crypto portfolio measured in BTC. And so that's what I think is very important. Many people can make money in a bull market, but very few people protect their funds when things go down. It's about doing better than buying and holding Bitcoin, not just making US dollar gains when times are easy. So let's say Michael Saylor's strategy will not buy Bitcoin anymore, or at least at a much slower pace. There's also a second potential purchasing engine, and that is Wall Street. What we see over here, that's how many Bitcoin are held by the ETFs, the exchange traded funds. This tended to go up very consistently. This is now measured in BTC. However, it peaked in October of last year. That was at 1.4 million. Now we are at 1.2 million. There are now outflows. The ETFs are not buying on average anymore. Now, what happened in October of last year? The Bitcoin price peaked in October of last year. So when ETFs are selling and Michael Saylor is not buying as quickly anymore, that is the fundamental problem. Here, have a look at the total Bitcoin spot ETF net flows over time. The selling has accelerated in the last 2 months. Now, that's all related to the medium to short term. Very long term though, I am still a Bitcoin bull. I'm one of the very few influencers here on YouTube that still continue to regularly make updates. And that's not because I get so many views. Views in general in the crypto space are currently down massively, roughly 80% from the all-time high. I'm doing this in order to refine my skills and my tool set. So once we do see the turnaround, we are much better prepared than the average market participant, and we can take much more advantage of the rally. Right now, the attention on crypto is extremely low. Here we see the number of search queries for the term Bitcoin over time. This is a 5-year chart. There have been very few times with that much apathy. But the long-term mechanics, they don't change. Fiat currency, so this is now USM2, tends to grow by 6.8% per annum. And I think that's a realistic estimate of actual inflation. I don't think that CPI is a good measure because consumer prices get cheaper over time. We get technological progress. We get more productive over time. So obviously things should, in terms of stable monetary supply, become cheaper over time. That does not happen because we've got monetary debasement, and that debasement is exactly 6.8% per annum. So that's what I take as my personal hurdle rate, the minimum targeted return with anything that I invest in. So that's 6.8% debasement for the money supply, while Bitcoin debases by only 0.8% per annum. And that will go down to even 0.4% in 2 years. So simply because of that, simply because the 6 percentage points delta that we get year over year over year, of course, long-term Bitcoin has to go up measured in US dollars. The effect is even stronger when we consider how much Bitcoin gets stashed away forever, either because it's lost or because people just allocate and set and forget. What we see over here, that's the percent of Bitcoin that has not moved for the last 5 years. This tends to go up almost monotonically. Thus, we are close to an all-time high. And over the last 5 years, this went up by more than 10 percentage points. In other words, every year, on average, 2% of Bitcoin's total supply exits active circulation. And this is already considering the expansion of Bitcoin's supply, because this here is not the number of BTC, this is as a fraction of all of BTC. And so we've got something that grows in supply by 6.8% per annum, and we've got this other thing that shrinks by 2% per annum. So we've got this one thing, fiat currency, that expands in supply by 6.8% per annum. And then we've got this other thing, Bitcoin, that shrinks in supply by 2% per annum. That's why the long-term story of Bitcoin is still intact. I do believe there's an extremely high chance that at some point Bitcoin will recover again, if nothing catastrophic was to happen. And I can only think of 2 scenarios, either a technical failure, so something like a quantum hack, or a drastic U-turn in regulation that suddenly it becomes illegal to own Bitcoin. So I do think there's still some risk, but the question is always, what's our upside relative to the risk? This here is Bitcoin relative to the US money supply. We've already established how the monetary base grows by 6.8% per year, but Bitcoin grows faster than that. From one cycle to the next, we do see how Bitcoin becomes more expensive. There are gains in purchasing power to be made in Bitcoin still. But of course, those gains over time are diminishing. The first cycle gave us an outperformance of 8,000%, the next one of 1,200%, then only of 130%, and the recent cycle was 71% outperformance versus the monetary base. Still, 71% over the course of 4 years in additional purchasing power. That's not too bad. Now, we've already talked about the problematic situation with the exchange traded funds. But those are actually not what's driving the price in the very short term. So here we've got the ETF changes over time. Let's add the long-term holder supply change in this chart. This has a much larger magnitude. The ETFs might be buying, the long-term holders might be selling, and the long-term holders move much more capital. Michael Saylor plus the ETFs, when we look at both of those entities combined, own roughly 10% of the circulating supply of Bitcoin. That leaves another 90% that's mainly held by the long-term holders. Of course, there's also short-term trading. The long-term holders, or the whales that have not moved their Bitcoin for a long time, they have also not reactivated their supply. The value days destroyed multiple is very low. That means the dormant Bitcoin don't suddenly start moving. That's good. They tend to move whenever we have rallied. That's when the Bitcoin that's hidden under the mattress gets sold to take some profit. But currently, those dormant Bitcoins don't do anything. Instead, we see the opposite effect. People start to become smart again. Here's the number of wallets with at least 0.1 BTC. That's finally creeping up again. It used to come down, partially because the Bitcoin price was high, but also partially because people bought via the ETFs. But now people are actually buying Bitcoin directly on chain again. And just have a look at the recent years. The real adoption happens through a bear market, as in when prices come down, that's when the number of addresses with 0.1 BTC goes up very fast. When Bitcoin has already rallied, then it tends to grow much slower. In other words, those crashes in Bitcoin, they're not necessarily a bug, they're rather a feature, because those low prices attract new people getting into the space. When the Bitcoin price shoots up, this generates, of course, a lot of attention, and some people just start buying at those high prices. But the smarter people, they just wait it out. They just wait for the next crash, and then they buy. So low prices are buying opportunities, and that's usually when long-term holder adoption grows as well. The short-term speculative money enters during the bull market. The long-term investor just buys after the crash. Still, in the short term, I'm still somewhat bearish. The market is still cooling off. This here is the realized hodl ratio. It measures how active is Bitcoin traded, short-term versus long-term holders. We want to buy when no short-term holders trade. We want to sell when short-term holders are very active. And currently, the short-term holders are still exiting the market. We are not yet in the green area though. Also, what we've seen with every single bear market is that the average Bitcoin investor had to be in net unrealized losses. We are not at that level yet. The average cost basis of the market is at $53,000. And in the past, we tended to fall below that by roughly 10 to 20% with every single bear market. So that was after Silk Road and Mt. Gox. That was after the ICO bubble burst. And that was after FTX, Terra Luna, Three Arrows Capital, etc. We have not yet seen anything systemic imploding. And maybe we will, maybe we won't. But the momentum in the short to medium term is still not bullish. And so I do think that holding Bitcoin over the next 5 to 10 years makes a lot of sense. Buying Bitcoin right now might not make as much sense. I still time the market, as I've already shown at the beginning of the video. My target is to acquire more BTC long term. And there is the Bitcoin trend following vault. So if you want to follow my trading strategies, we have started the vault in October of last year. Then feel free to check out the details. So I made some money in timing the Bitcoin market while Bitcoin, of course, crashed. The basis for this is over here, View Live Analytics. So I've run a lot of simulations of buying and selling the asset. This is called backtesting. You can have a look at this in more detail in this video. It's all explained over here. That's on the website. If you go to copy trading to the Bitcoin trend follower and then you click here, live analytics. If you do consider to join, then there is the premium membership. It's $159 per month. There's also a 7-day money back guarantee. So in case you do not like premium, just email me over here and I'll refund you. No questions asked. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.